Looking at the past century, there were so many forecasts of a new regime, of the collapse of a regime, and they were mostly disappointed. Regimes do not change so quickly. The focus should be not how to change a regime, but rather how to make the system more resilient, so that when there is a change in regime, the system is sufficiently resilient and flexible to be able to accommodate it. If you look at history, there were very few regime changes, and there were a lot of policy changes and circumstances that change. Of course, we are now in an era where technology has moved extremely quickly, where AI is also doing a lot of things that we have never seen before. So we should be ready indeed to live in a new world. But I would not call it a regime change. I will call it a dynamic world. And to live in a dynamic world, we need to have the human capital, the resilience, the stability, and therefore also the education. The population must be given a lot of financial literacy tools, because financial economics today is very complex. It's not for amateurs, and not everyone needs to be an expert, but everyone needs to know to read and write when it comes to this particular context. Well, Alan Greenspan lived to be 100 years old. So he saw a lot of things, impacted on a lot of things, and was a major player in a lot of things. I think that the legacy that he leaves is multifolded. Number one, he introduced the concept that monetary economics and monetary policy is part of a broader context of the financial system. And the financial system is a system that requires great care when it comes to expectations and when it comes to stability. So financial stability is an important lesson. Furthermore, what is very important is that we live in an uncertain world, and therefore risk management is not only the task of financial analysts and portfolio managers, but also of policymakers. Because policymakers, when they see something, they need to decide and get an assessment. Are we sure that that's where we go? Aren't we? How do we balance alternatives? And I think that risk management has been a very important element for Alan Greenspan. Furthermore, so stability, risk management, and understanding that data is the most important input into our decision. So therefore, he was extremely meticulous in knowing the details of the data, to the extent that most of us actually thought he exaggerated by looking at the minutiae about everything. But he had a system, somewhere a computer in his head, that when he saw a development there, he asked, how does it fit into the system? So I think that the legacy, again, monetary policy is a complex situation, it's part of the financial system, and we need to be able to incorporate. One more thing, however, which is moral hazard. If you give the market a message that if something happens, you will always bail it out, don't be surprised that the market reacts, and the market may take excessive risks. That's just because of the fact that it expected the government to step in. One of the issues that in a way clouds a bit Alan Greenspan's period is the belief that we can rely on the private sector to self-regulate itself, and therefore we can have very light touch regulation. Things will work out. And I think that being wrong on such an assumption is very important. And he was not the only one who was exceedingly optimistic about the self-regulation of the financial markets, Secretary of the Treasury, Bob Rubin, Undersecretary of the Treasury, Larry Summers. They were all partners in the same team that worked together with Bill Clinton, that operated to open up the regulatory system and to lighten it. I think in retrospect, they might have gone too far, because one of the reasons of what is called in the literature the Greenspan put, namely the feeling that there will be big daddy government that will bail you out, that this is a little bit dangerous and one should be careful about it. I think we have learned the lesson.